Good afternoon, everyone. Eric Corrett again here from Market Eye. Delighted to be hosting this next session. We have Piers Redwood and Miles Redwood, co-CEOs and co-founders of Payright Limited, ticker code PYR. Delighted that we're able to time the conference just in time for Payright to come out of a trading halt off the back of a big announcement today. But before we go into that, maybe why don't we just assume for those that don't know who Payright is and what the company does, with a short sort of potted history of who you guys are and in the markets you're operating in.
Yeah, definitely. Yeah, no, thanks, Eric, and happy to start with that, a bit of the 101 of who is Payright, who we are and what we do. And I think perhaps the easiest way to think about that is as a point of sale consumer lender. That's as a credit approved point of sale consumer lender. We give our customers and consumers more broadly the ability to walk into one of our rapidly growing merchants around both Australia and New Zealand to make a purchase today and then pay for that purchase progressively over time. So it's really deferred payment options offered at the point of sale. I'm sure everyone listening on the call today is familiar with, and increasingly so, the concept of buy now, pay later. That's that pay in full end of the market, that sub $1,000 end of the market. Likewise, I'm sure everyone is very familiar with the concept of personal loan providers, and we sort of sit somewhere in the middle. Our product, I guess, or unit economics is very much aligned with that of a personal loan provider, in that we extend credit right up to $20,000 and offer terms up to 60 months. Our average transaction size is around 3,500. We do put up applicants at the point of sale through a credit assessment process, and we defer revenue over the life of the loan. So from that perspective, very similar to a personal loan provider, but our product is sold through a merchant network, a trusted merchant network, which is really important because the feedback we receive is that affords that same level of confidence and trust in the end consumer. So from that perspective, there's hallmarks and traits of a BNPL provider. So again, we sort of sit somewhere in the middle, and being, I guess, high price point, which is a key point of difference between us certainly and the micro ticket end of the BNPL market. And again, I mentioned before, our average transaction size around 3,500. Versus, let's say, an Afterpay, which I'm sure everyone's very familiar with, an average transaction size of $150. So very distinctly different. And also being high price point, it does also therefore mean that our merchant mix extends well beyond where the micro ticket end of the market typically play, which is obviously that sub $1,000, very retail focused and primarily e-commerce. Now we can do that. We do that. We've got plugins to all the major web platforms out there. And retail represents about 35% of the book. But again, being high price point, our merchant mix extends well beyond retail to other key areas and verticals. So things like home improvements, a massive growth vertical for us. We saw that sector in particular double in the December quarter compared to the September quarter. So that's things like solar and internal and external home furnishing, so flooring, fencing, roofing, decking as well, trade services, plumbing and electrical, health and beauty is another big area for us, which was somewhat COVID restricted, as you can probably imagine, throughout the whole lockdown era, but certainly seen an explosion in demand for pay over time services in that vertical in recent quarters. We also specialise in photography, education, and aftermarket automotive as well. All of those verticals and sectors are significantly underserviced by our personal loan providers, and the micro ticket end of the BNPL markets are much less congested in that space. Worth highlighting that we are a listed stock, of course. We IPO'd towards the back end of 2020 it was, which feels like a very long time ago now. And since then, we've just come off our sixth consecutive quarter of really good, strong growth. Every quarter outpaces the previous. We've got a loan book fast approaching $100 million, fast approaching 100,000 customers. We've got over 3,500 merchants on the books in, like I say, both Australia and New Zealand. And to your point, we've just come out of a trading halt this morning off the back of having announced transformative funding package, which is both debt and equity, to really turbocharge that growth and really fast track that path to profitability as well.
Yeah, great. Thorough intro, thank you. Maybe just let's expand on the announcement today around the warehouse financing facility and also the cap raise. Maybe just some of the specifics around it and I guess what it means for Payright going forward.
Yeah, so this is absolutely a huge, I use the word transformative milestone for the company. This is something that we've been working on for quite some time. For people listening in today that do follow the PYR trading updates, we announced some time ago our intention to work towards or run a structured process towards transitioning to a bank warehouse facility. And pleased to announce a $125 million facility that we announced this morning with Goldman Sachs. Of course, they need no introduction, a reputable global bank. So they're the senior lender with iPartners as the mezzanine arranger. So this is a significant immediate benefit to the P&L. Obviously, historically, we've been funded through what is a notes program, a private notes program, which has been great for us. It's got us to where we are today, but at a cost of funds of around 10 to 12% through that notes program versus where we are in the warehouse at less than half that, at around sort of 5% blended. It significantly fast tracks that path to profitability. As you can imagine, that goes straight to the P&L on a loan book of around 100 million. A reduction of 5% in that cost of funds, which is a big line on the P&L, transforms broadly to a $5 million saving on the P&L when annualised. So a significant reduction in our cost of funds, plus what it also enables, and you spoke before about the growth profile, it enables us to really take the handbrake off in many ways and turbocharge that growth. So that's the warehouse piece. So we're really pleased to get that in. And in parallel with that, we also announced an equity raise, a capital raise, which was oversubscribed, really well received, and at a significant premium to the current share price as well, such as, I guess, the acknowledgement of the stock perhaps being undervalued, and you've got a lot of institutional, sophisticated and wholesale investors have obviously come in and being prepared to pay a premium through this capital raise process. Again, that's testament to where they see the value of the stock. So both those things certainly transformative for us as a business.
Great, Miles. Congratulations on that announcement too. So maybe one for you, Piers. Miles talked a little bit about the higher value purchases and some of the verticals that you're playing in. Maybe can you specifically call out some of the merchants you're working with, and then maybe more broadly, what is it that's attracting those merchants to Payright over other, potential finance providers?
Yeah, absolutely. Look, I think first and foremost, and Miles called it out earlier on, our speciality around that bigger ticket, more considered purchases, which is a really important point of difference when you consider us versus the broader consumer lending space. And there are a variety of different models out there. We see ourselves more closely aligned to that consumer lending space, which Miles again referenced earlier on. And I guess because of that, the markets that we operate in are very, very different as well. So some of those industry types being health and wellbeing, home improvement, photography, yes, retail, but retail typically more from that furniture or brown goods, white goods type market. So that's an important sector for us, as well as automotive and health and wellbeing. And we're seeing quite significant growth around all those key sectors. I guess one thing that's common around all those areas is that considered purchase nature, the sales process, the consultative sales nature of those industry types. And if we look down into some of the merchants that we operate within, that kind of speaks to, I guess, some of the secret sauce of Payright and how we've been able to be quite successful and operating in a market which is significantly less competitive than what people probably see when they think about buy now, pay later or the consumer lending landscape. So merchants like that that we work with are businesses, well-known brands like Stratco, Australian Outdoor Living. We work with a leading education provider, Learning Online, well-known brand like the O'Brien Group, which I'm sure everyone's very familiar with, as well as retail names like Bevilles and others. So all those common themes really, that one, they're specialists within their field. They're a lot less competitive, and there's a lot less sort of buy now, pay later or consumer lending businesses that are sort of pining for the opportunity in that. So we're the beneficiary of that in a lot of ways. We don't share the checkout with as many providers as what you might expect across the broader BNPL space. But we also work very closely with a number of key strategic partnerships which have very much a one-to-many approach. So that gives us access to and scale to thousands of opportunities off the back of it. And just to name a couple of those key partnerships, we work very closely with the home improvement marketplace Service Seeking. We also work very closely with the outdoor power manufacturer Massport, as well as payment gateways such as FinPay and Mint Payments. And collectively, all of those merchants, all of those opportunities that sit with those partners represents thousands and thousands of opportunities, which provide a bit of a funnel for Payright, and we could collectively onboard all of those opportunities on a month-on-month basis. So that's really underpinning that scale and that growth. They all align very well to that key unique point of difference around our consumer lending lens to the landscape, as well as that specialist around those bigger ticket transactions.
Thank you, Piers. Just a reminder to the audience, if you would like to ask any questions, to use the text box on the right-hand side of your screen. Miles obviously talked about listing December 2020. Obviously, that provided some capital to the company. Can you talk a little about how that capital has been deployed? How's the technology changed? And what's the user experience like for your customers and merchants? And also maybe in that answer, if you could cover off the credit checking process as well.
Why don't I take that one in the first instance? Obviously, feel free to jump in, Piers. But yeah, look, absolutely. We've built and designed what is a very quick, slick application process designed to be completed in a matter of minutes at the point of sale. So real-time credit assessment, real-time decisioning, like I say, quick, slick application process, real-time settlement to the merchant, and sets up that receivable in the back end, even automates the early stage collections process. So completely touch-free end-to-end. And there's one piece of positive feedback we do regularly and consistently get from the markets, that's both customers and merchants alike, is that quick, slick nature of our application process. Now what we also do as part of that application process, we collect a lot of data along the way, and that has had a significant impact on our arrears position. In that, I think I touched on it briefly before, as did Piers. We do credit check all our applicants. We consider a range of affordability type measures as part of that application process, things like serviceability, stability, capacity to pay, along with the ongoing stability of that applicant. We scrape bank statement data where appropriate to do so, ID verified to safe harbor standards, all of which sort of gets thrown into that application algorithm, if you like, to spit out that approve or decline decision. And what that then means, of course, is, and you asked about the arrears position, our arrears position is well below that of the broader industry average, as is our actual loss experience, and also well within our provisioning. And we talked before about the impact that the transition to the bank warehouse facility will have, and that reduced cost of funds on that path to profitability. But the fact that we are still well within our provision, quite significantly below our provision, probably also means that there is opportunity to reduce that provision and potentially even write back some of those losses already taken to the P&L, or that provisioning already taken to the P&L in future periods, therefore further fast-tracking that path to profitability.
You just referred to profitability. Let's go down that path. I think as part of the update today, there was an update about sort of loan receivables target, which would see Payright at a break-even point. Maybe you just want to provide a bit more colour on that.
Yeah, definitely, and it is a real focus area for us. We're very focused on that path to profitability, and we put out a really good set of results in the half year where we saw revenue grow, and we saw our operating costs reduce, the effect of which was effectively a 25% improvement in our net loss position. So it's a big focus area for us, and we haven't really gone out with anything forward-looking in terms of guidance, but we've just done some back of the envelope analysis, if you like, that really helps to build a picture around what that path to profitability looks like in terms of our existing book size. So overlays our yield within the book, overlays the provision for this significantly reduced cost of funds, and also a potential for a reduction in our provisioning, as I've just sort of spoken about. Fast tracks that or overlays that onto a book size of around 200 million, and keeping all costs, other costs broadly stable, albeit with a sort of a modest overlay for some increase in those operating costs. And it gets us to about 200 million book size, which we're expecting to get in about 18 months.
Great. I think that's really hard to understand that. Maybe just a quick one, extending on that, Miles, just about maybe some of the operating leverage in the business. How should we look at Payright as, being a highly leveraged business in terms of, you're building up your loan receivables? How much does the rest of the business expenses need to increase with that?
It's a good question, and we've spent a little bit of time in recent updates really trying to educate the market, less so on the leverage piece or the cost impact, but more really around the revenue recognition, because it is quite distinctly different, certainly compared to that of the micro ticket end of the BNPL market. Now, I've described, obviously both Piers and I have described the longer term nature of our lend. Average transaction size of around 3,500, average term of around 24 months. And what that means is we defer and recognise revenue over the life of the loan, which we see as a significant benefit associated with that point of difference, in that we've got guaranteed revenue, new guaranteed revenue already booked up for future periods. And at our quarterly results, we had 3.9 million in the December quarter in revenue, which was up significantly from the prior year. But perhaps more notably, or equally as notably anyway, sitting on the virtual balance sheet of sorts, we had revenue from lending activity already taken place, albeit not yet recognised, of around 16.8 million, which is a big number relative to our full year revenue number last year, which was 12.7 million, or 12.2 million, I should say. So to have 16.8 million there from lending activity already taken place, albeit not yet recognised. So we didn't write another cent, but still have 16.8 million in revenue already booked up and available to us for future periods.
Got it. That's clear. Piers, maybe one for you. Be remiss of me not to ask. Lots of discussion around regulation in the buy now, pay later space. How do you see that playing out? And maybe more specifically, how do you see that impacting Payright, if at all?
Yeah, I mean, look, you're absolutely right. There has been quite a considerable. It's a hot topic, and we have been a participant in that topic. Of course, we are one of the co-authors of the Buy Now Pay Later Code of Practice, which is a world first when it comes to self-regulation within the industry, and we feel that those regulations go well and truly beyond the current regulatory framework that Payright operates within. So that's a really important topic, one that we felt was very important to be a participant in. We take the responsible, lending piece very, very seriously. We've spoken a couple of times about the key point of difference for us, and we feel that Payright's perhaps more akin to, the way that we lend through our business model is perhaps more akin to your personal loans and regulated products anyway. So that's my background. It's Miles's background. We both come from that sector, and we've really built this product with that concept and framework really firmly in mind. So things like credit checks, we do them. We feel it's a really important element, not just from a social impact perspective, but equally from a credit assessment perspective. We do other things like bank statement scraping to be able to identify customers' ability and propensity to be able to repay their credit worthiness. It all really goes into that underwriting algorithm and pot that Miles spoke about earlier on. And we feel that's a very important part of how we do things. It's another key point of difference, and in fact it's another reason why a lot of merchant partners and customers like to deal with us, because we feel we put a fair bit of effort into extending credit as responsibly as we possibly can. So that dialogue is one that we have, continue to have, and we'll be a participant on moving forward.
Thanks, Piers. So Payright operating in the Australian and New Zealand market, what's the company's view or strategy around potentially expanding, beyond Australia and New Zealand? Or do you look at the current opportunity and see a lot more white space there and a lot more opportunity to build and scale here? We have seen a few venture into the US and be successful. What's the view on the sort of the geographic expansion?
Yeah, why don't I kick that one off and then hand over to you, Miles? But I think it's another great topic. I think for us, we've got a vision to be the one-stop shop for everyone's payment needs. That's really why we're here. We've got a strategy, a three-pronged approach, a three-pronged strategy to lend into that, and three pillars that we focus in on. That first pillar, really is around being the go-to provider for considered purchases, consumer lender provider for considered purchases across Australia and New Zealand, which is our core. We feel that's a really important part. There's a significant opportunity that exists there. It's a $300 billion addressable market, these products still only penetrate into a fraction of that. So there's a lot of movement to go in that space. We feel with the new funding structure, which Miles talked about earlier on, we've got all the tools at our disposal, or more tools at our disposal, to be able to not only grow and scale and continue to attract bigger, larger merchants within this current geography that we operate within, but also keep a very firm eye on that profitability line that Miles mentioned earlier on. So that core is really important to us. But our second pillar really is around complementing what has historically been a merchant philosophy, I guess, and still is, with a consumer-led approach, a way to attract customers and additional opportunities or gain consumers to the platform. So, we have our app out there, and that's a really key driver of customer engagement. But soon we'll be embedding into that app a tap and go, or tap a card, no stored value card, which is imminently due for release, and that will allow customers to access Payright really on anything, anywhere, anytime, effectively putting Payright in the hands of every single consumer, and it's de-linked from the merchant. So they don't have to go to a Payright merchant to access the program. They can effectively use it anywhere. And that's a really powerful tool for us to attract additional customers to our platform. So that really underpins that second strategic pillar. And the third one really is around our desire to expand the current Payright product offering to better meet the total transaction needs of both consumers and merchants. We understand and recognise that consumer lending and interest-free lending, as we currently do, is one portion of their transactional journey, but they have a lot of other transactional needs. So, we are focused on a variety of different product developments to be able to meet those transactional needs, not just from a merchant's perspective, but also from a consumer's perspective. We've recently applied for our credit license, which we expect to hear back on shortly, which will give us the opportunity to develop more regulated type products, interest-bearing products, which will be very helpful for those merchant groups where margin is a significant problem and merchant service fees might not necessarily apply, but also leans well into that previous point you made, Eric, around that regulatory landscape and our dedication and focus to that responsible piece. So I guess those three pillars combined are really where we're focusing in on, notwithstanding, of course, there is significant opportunity overseas, and we do see and identify that. And we do keep a very firm eye on what's happening in global markets. And I think with the development of some of the other opportunities we've got here, that will give us the precursor for us to effectively move into other markets without, pulling us away from that dedication and focus towards that pathway to profitability.
Thanks, Piers. Very helpful. Questions come through. You briefly touched on it there, and I asked it in a different format earlier, but just around the support that you're providing to merchants and why it is that they would choose to use Payright. Can you provide a bit more colour there?
Yeah, sure. Miles certainly touched on it, and I guess we have built this product with merchants in mind. I mentioned earlier on that merchant philosophy, that merchant first philosophy, which sort of underpinned where we've come to date. Now we are evolving that, of course, but that dedication to our merchant base is really important. So we've built a number of tools off the back of the Payright platform to accommodate that, which is one of the reasons why they love to use us. So yes, customers can apply directly through our app. Yes, they can apply directly through e-commerce plugins, which people might become quite familiar with, but we go one step further to be able to provide a lot of our merchants, particularly in the trade services, with tools like being able to embed Payright into their quotes or their invoices, or be able to interact with Payright through different training modules through the Payright merchant portal. We have a lot of tools and content delivery that we actually deliver to our merchant base through these electronic tools, which is we feel anyway a lot more sophisticated than some of the other counterparts that are out there. But it talks to that consultative nature of our business and the consultative nature of the industry types that we deal with. We work very closely with the merchants to understand their full sales cycle. It's not as much about us being able to purchase an item of clothing like a t-shirt or a pair of pants, whatever it might be. Rather, it's a way, how can you design a an outdoor patio setting or an outdoor blinds or whatever it might be to be able to complement someone's purchase within their home. That's much more of an emotional purchase. It's much more of a considered purchase. And a lot of the tools and the content and the training that we provide merchants really has that in mind. So that's what we focus in on, and we feel it's a significant difference when it compares ourselves to that broader consumer lending space, and certainly puts us a long way, separates us a long way from that pay in for micro ticket end of the market, again, that being the Payright specialty.
Okay, got time for probably another 2 questions. There's a couple of questions just around the broader environment. Obviously, there are a bunch of buy now, pay later providers which are sort of adjacent to Payright. Do you see any industry consolidation coming about? And if so, what's Payright's view on it? Obviously, you just talked through a whole bunch of strategies and you're clearly very focused on growing the business, but how you view that. And then also just more broadly on competition, what's to stop another company to come in and then therefore focus more on the more considered purchases that Payright focuses on?
Yeah, I mean, consolidation is a really hot topic. It's a good topic. It's a good question. I think we've seen it start to take place. I think a lot of us anticipated it, given the significant demand there's been for products like these. It's perhaps not surprising to see a lot of new entrants into the market with varying business models, and perhaps it's equally not surprising to see that consolidation piece happen. Although it probably happened a little bit sooner than what perhaps a lot of us anticipated. But there's been some big deals, big international deals with Block or Square acquiring Afterpay, and opportunities with Sezzle acquiring, Zip acquiring Sezzle, and even the Latitude Hum deal. So in a lot of ways, we feel that's an important evolution of the sector, and we don't shy away from it. I think it shows opportunity in a lot of ways. It shows opportunity to be able to effectively move some pieces around the board and to create a more coherent message to merchants in terms of the brands that are available to them, and those key points of difference, the different varying business models. It cleans that up a little bit, but it also provides customers with a better understanding about the choices that are available to them, the responsible choices that are available to them. So we feel that's a very important part of it. It's the evolution of the sector. But I guess we also see that as a endorsement to the appetite for a lot of these big global businesses seeing the demand across, the ability to spread the cost of items over time, and do so across the areas that we focus in on. I mean, that's a great endorsement of global businesses. So we see it as a positive. We understand and recognise that it's important to be a participant in that, given the evolution of the sector, and we're a participant in that sector. So it's an important dialogue to be part of, and it'll be very interesting to see where it ends up.
Great, thanks, Piers. Just conscious of time, maybe 1 or 2 final ones. Just thinking longer term, I mean, you've talked through a bunch of the initiatives and strategies that you'll be focusing on to grow scale in the business. But I think, looking out longer term, where do you see Payright? We've talked a little bit about maybe international opportunities. Do you see new verticals? Do you see new product offerings? As I mentioned about Tap and Go, how does that change the business? Yeah, I think just, painting a little bit about the bigger picture, longer term, how you see the business.
Yeah, I mean, from my perspective at least, I'm sure I speak for Miles, and we are very positive on the future of the business and the longer term strategy. We feel that now, certainly with what we've announced today, and the opportunity around our significantly reduced funding costs and the tools to be able to grow and scale the business, we feel very bullish on the opportunity and growth profile for the company. I think if we can also answer that questions by perhaps looking back on the track record. Miles mentioned earlier on that quarter on quarter and some of growth that we've been able to demonstrate over the course of the last several years. Equally, that revenue growth that's accelerating in the context of the deferred revenue recognition. Miles mentioned, again, a unique point of difference with us versus the pay in fours, and also that cost optimization. We're finding ways to reduce our costs, and it all points to one clear pathway, and that is that pathway to profitability. And that's really how I think we will define success, and seeing that happen in the near term is something that we're very focused on.
Excellent. Thank you very much, Piers. And also thank you very much, Miles. I think we've now exhausted our 30-minute slot. So again, yeah, thank you very much for the update. It was very timely off the back of today's announcement, and obviously very exciting things going forward for Payright. So if anyone has any other questions that they didn't cover off, feel free to reach out to the company directly or to me. Our details are on the company announcement. So we'll take a short pause. The next presenting company is Button. Thank you all.